to you live from the 16th Nigerian Economic Summit Group held in Abuja, Nigeria. Now, somebody once said that economic participation is not a privilege, it is a right. And consequently, in Nigeria, a lot of issues around financial management have come to the fore. Governance issues, in particular, have been the hallmark of Nigeria's economic reforms. The focus is very much on improving systems and introducing international best practice in how things are done in the country. The media has tended to focus on some of the more dramatic actions that were taken in the last year by the Central Bank of Nigeria regarding the banks in Nigeria, and also recently the more forthright stand taken by the new head of the Nigerian Securities and Exchange Commission regarding the Nigerian Stock Exchange. But also the pension funds in Nigeria, the insurers, are also being scrutinized. The broad aim is for regulations to deal with what has been regarded as a malfunctioning financial system in the country, because authorities now realize if they don't fix it, they'll continue to drive investors away. And if they don't fix it, they will not really fulfill the basic tenets that all Nigerians have a right to participate in their economic revolution. Talking to us about questions of regulation in Nigeria at this juncture, with a lot that's been happening recently, is an esteemed panel. We have the Governor of the Central Bank of Nigeria, Lamido. Sanusi, thank you very much for coming through. We also have Mr. Fola Daniels, who is the Director General of NICON. We also have Mr. Mohammed Ahmad, who's the DG of the Pensions Commission. Thank you very much. And last but certainly not least is Ms. Arunma Oteh, who's the Director General of the Securities and Exchange Commission in Nigeria. Let's start with you, Governor. For you, what's the critical part of the reform agenda in terms of the work that the central bank has been doing?
Well, I think the most important thing is to understand that the fixing of the banks itself is just a first step. The real challenge is to make sure that after the banks are fixed, we don't go back to where we were in 2007. And at the heart of the problem is the fact that the banking system as a whole has not historically played the role it should play, which is an intermediate role between savings and investments in the real economy. So the greatest challenge is, after fixing the bank balance sheets and giving them capital and liability and improving governance, these are what are called hygiene issues. How do we then make sure that banks continue making money, but make money while growing the real economy? And therefore, how do we go beyond banking and beyond the capital markets into the wider macroeconomic reforms that are necessary for the economy to thrive?
Mr. Daniels, in terms of your role as head of the Nigerian Insurance Commission, what do you see as a critical part of the new regulations that you are being mandated to institute as part of the broad economic reforms?
Yeah, for the insurance sector, the financial crisis of last year, though we're not directly affected, but we suffered the contagion effect of the banking crisis. You understand that the banking sector is a major investor in the insurance sector. They are majority shareholder in about 12 of the biggest insurance companies. So we are affected. And what are we positioned to do? What we've tried to do the last 12 months is to try to rekindle confidence in the insurance sector. From 2007, a lot of attention was directed at insurance. You remember that pre-2007, just a few insurance companies were listed in the stock market. But after the recapitalization exercise of 2007, we had more than 60% of the insurance companies being listed. So definitely what happened last year had an effect, negative effect on insurance institutions. I think it's more serious for insurance because insurance is just growing in our environment. Insurance is we are selling insurance, people are not buying insurance. So our actions is geared towards reinvigorating the public interest in purchasing insurance.
All right, Ms. Oteh, your views on what your mandate entails and what you need to do. We've seen spectacular events in terms of a stock market crash in the last year, needing to revive that, and governance issues as well.
Thank you, Lerato. Our view at the Securities and Exchange Commission is that the capital markets are truly an enabler of any economy, and that for the Nigerian economy, given where it is 50 years on, where we're still totally dependent on the oil and gas sector, that it is critical to seek to diversify our economy. And the only way that we can diversify our economy is if we build a world-class capital market. And the only way you can build a world-class capital market is a market that has the highest integrity, a market where investors feel that they're protected, where the decisions that they make or the consequences of the decisions that they make are based on their own decisions and not based on issues of market abuse or things that impact the market. So our goal at the SEC is to build a world-class market, and there are many aspects of it. The first one is first to ensure that this market is of the highest integrity. Two, that it's one that fosters investor confidence. Three, that it has the depth and breadth in terms of the product offerings, in terms of the players in the market, such that it's immunized from anything that happens, whether it be the global financial crisis or issues that pertain to this market. But also that it fuels what creates opportunities to harness the potential of our country. And the greatest asset that our country has is its people. And in Nigeria, you'll agree with me that there's a lot of entrepreneurial zeal. There are lots of hardworking people. The capital markets allow people to raise money for their businesses. It allows the government to raise money to be able to address the huge infrastructure challenges that we have. But it also creates discipline because the capital markets allow you to focus on corporate governance in a much more visible manner than you would otherwise.
We'll focus on some of those issues in a second. Let's get your views there, Mr. Ahmed, in terms of the role of the Pensions Commission within the broader system of reforms.
Well, incidentally, our industry is the youngest industry, even though I have the highest gray hair here. But basically, there were two main reasons why the pension reform was introduced. The first one being that to ensure that we accumulate resources, that when you and I retire, we get our benefit as and when due. By so doing, of course, we'll be accumulating huge long-term funds, which incidentally never existed in this country. As at the end of September, we have close to about $14 billion US, which has been accumulated in the last perhaps 3-4 years. But beyond that, of course, the industry can only survive if indeed we have macroeconomic stability, we have a very strong capital market. And as an industry, for that reason, we decided to be an active player in the financial services industry.
You use the term, it's important to establish macroeconomic stability. And Governor, I want to start from the get-go. Many people are concerned about the perceived confluence of roles that the central bank in Nigeria is playing. Anywhere else in the world, the central bank's role to monitor and regulate the banking system, manage inflation. But it seems as though Nigeria's central bank is taking on fiscal responsibilities, needing to also stimulate growth, needing to provide funding for the manufacturing sector, needing to create mechanisms to help the government finance a variety of its projects, bonds, the like. And there's a sense that there's too much of a burden that you bear.
I don't think so. I think, first of all, there's no unique role for a central bank. In South Africa, the central bank played a developmental role until recently. It became a price targeting central bank. The bank in Nigeria, Malaysia, has been playing a developmental role for 3 decades and continues to play that role. I have never believed that the central bank governor in a developing economy can afford to think like Mervyn King or Ben Bernanke. It's not possible. Okay, my job is to ensure that we have macroeconomic stability, but it's also to see the manner in which we can use the enormous balance sheets that we have to contribute to economic growth. We were facing an economic crisis, and everybody has gone into quantitative easing. Now, if we just have quantitative easing without those development interventions, what would happen is that you increase money supply goes back to the capital market, you create a new bubble, and you don't fix the problem. So we've been expanding our balance sheet in a counter-cyclical manner, but expanding it in a targeted direction, and that direction is the real economy. With fixing the infrastructure problems in Nigeria, fixing the power problems in Nigeria, fixing the problems of industry and agriculture are at the heart of the survival of the Nigerian economy. It's a role that I see as obligatory. It is transient. It should not be a permanent role. We do have a very clear exit plan, and we do think that with time, the various ministries and other institutions should take over.
All right, let's talk about the AMCON, because that issue has been raising a lot of eyebrows, and there's been a lot of focus, and there is a sense that with the establishment of an asset management company, at least it will try to inject liquidity and stabilize the stock exchange in the long term and improve market performance. Concerns, though, about how you're going to raise the capital for the AMCON, and when exactly. You've got a 10-year plan for the AMCON, but is it a sustainable plan?
Yes, it is. I'll have, well, first of all, the issue of raising capital for AMCON, we've made very clear. The currency that AMCON uses is a bond that it will issue in the market. It will be guaranteed by the Federal Ministry of Finance. It will have all the features of sovereign bonds. That is paper. And anytime the banks need liquidity, they can come and repo that paper with the central bank and trade it. I do believe that AMCON is going to come out with an announcement very soon. As soon as the board is confirmed, we've done all the work. Very soon we'll be able to purchase those non-performing loans across the industry. AMCON will also recapitalize the banks, again using those bonds. So in terms of raising the capital, that is not a problem. As for the funding model, we have a very clear funding model, very conservative, that makes sure that between the proceeds of the investments of AMCON and the proceeds of a sinking fund set up by the central bank and the banks, there will be total funding for AMCON. So there'll be no need for an increase in the government deficit.
I mean, we're talking about a Nigerian economy that needs to be reinvigorated, capital markets that must be developed. And there is a fear that with the kind of role that you're going to be playing, you'll be crowding out the market, that bond market, for instance. The private sector also needs to raise money through the Nigerian stock exchange, through the capital markets. And there is a sense that once you come in with mechanisms to raise money for AMCON, it's going to be very difficult to raise money for new business ventures, for existing businesses in Nigeria. Just your response.
No, but that's not true, because we've not said that AMCON is going to raise the money from local money supply. I mean, AMCON could give the money, and central bank could create money, as it were, and invest in those bonds. The issue of money supply management is one of monetary policy. So the bonds are issued by AMCON. Whether those bonds are sold down to mop up liquidity in the market or simply sold to the central bank as part of our QE depends on what money supply is. We're in a monetary targeting regime, and I don't see any risk at all of crowding out.
Let's bring you into the conversation.
No, I'd like to react to that as well and say that one of the challenges of our capital markets has been that it hasn't had the breadth and depth. And therefore, developing a fixed income market that is first class is absolutely essential. And therefore, what we have done as a country in building a sovereign bond market is the first step in the building blocks of a fixed income market. What we're seeing is a lot of interest from both local institutional investors and international investors in what is potentially going to happen in the fixed income market. So like the governor said, I do not think that AMCON raising bonds in the capital markets is going to crowd out the private sector. If anything, it does show that there are opportunities and there are different kinds of assets that institutional investors can focus on. And I'm sure that Ahmad can talk about the $13 billion of pension assets that are looking for high-quality assets to focus on, whether it be corporate bonds, whether it be sovereign bonds or the subnational bonds.
We'll talk about the pension schemes in a second. The market at the moment, Ms. Oteh, is waiting for the release of a forensic audit regarding the Nigerian Stock Exchange. Many are curious as to when is this report likely to be released. How badly do you expect the outcome to be?
In terms of context, we at the SEC had asked that we have a forensic audit that looks at some of the issues around the exchange that relate to financial management, that relate to governance, and relate to other issues. We have had periodic updates from the two firms that are working on the investigation. The KPMG, which is a well-known audit and consulting firm, and Aluko Oyebode, which is a law firm. What we expect from the investigation is that it will focus specifically on some of the observations that have been made over the recent past. The SEC last year, in September last year, had actually done an inspection of the Nigerian Stock Exchange and raised some issues which we have been working with the exchange on. What we expect is that this investigation is going to deepen some of those findings. The US SEC also had carried out a peer review on the Nigerian capital market, and one of the aspects of that peer review was to look at the exchange. What I do see is that it's clearly an opportunity for us to build a first-class marketplace. We've had an exchange that has been in place over the last 50 years, but it is one that the issues that it's going to be managing are going to be much bigger than the past. And I do believe that this investigation will help us focus on some of those issues and how we can manage them so that the capital market can truly work for this country and also work for the ordinary citizens of Nigeria, and essentially help us as a nation realize our aspirations, one of which is in 10 years' time becoming one of the top 20 economies in the world.
You talk about possibly the findings deepening existing observations, and this raises a question about perceptions, and I know that perceptions are not reality, but in this instance it's very close. Some experts have drawn a direct correlation between the performance of the Nigerian stock market in the last 18 months and the problems of governance at the Nigerian Stock Exchange. Now that's a debate in itself, but for you the issue is how do you manage perceptions about the lack of integrity in the Nigerian stock markets, because certainly for foreign investors, they are wary about channeling investments through the stock exchange because they don't believe that there is a better system of governance. Your job is to fix that, but right now you really need to manage those perceptions. How are you going about it?
I do think actually perceptions are sometimes more important than reality, and I hope that our track record over the last 9 months does show first that as the apex regulator of the capital markets, that we have zero tolerance for anything that is improper in our markets. There are a number of actions that we've taken. There are actions that we've taken in coordination with the Nigerian Depository Insurance Corporation, the Central Bank, the Economic Finance Commission on Crime Commission, and those relate to issues around insider dealing and market abuses, different forms of market manipulation. We've recently taken 260 individuals and entities to our Investment and Securities Tribunal, which is a specialized court that focuses on issues around securities. There are other actions that we're taking in terms of educating investors as to their rights and as to the benefits and risks of investing in these markets. What we're seeing and the feedback that we're getting, both from local investors and institutional investors, is that they can see that through our actions that we're demonstrating that we do feel that our primary mandate is to protect the investor, whether institutional or retail investors. We do think it's critical. We do think that as a country, that if we do not focus on communicating in very visible ways that our country is not a country where we permit improper behavior, then we will not build a world-class market. So we hope that our actions are showing that, particularly over the last 9 months.
Yes, Governor?
Well, nothing to add, just to say that I think Arunma has done a fantastic job since she came on board. We have worked very closely with her. Banks are also quoted institutions, and a lot of what happened in the banking industry happened through the stock market. And we always believed at the central bank that if we just fixed the banks and did nothing about the stock market, then we really would not begin to address the problem. So we've worked closely with her. We've been very happy with what she's done, and we think it's the general direction.
Okay, we'll talk about deepening the markets in a second. Mr. Ahmed, I want to bring you into the conversation because conservative estimates suggest that pension funds are invested in about 40% of government securities through the NSC. Now we're talking about restoring credibility and integrity to the capital markets of Nigeria, the fears that foreigners have because of perceptions of a lack of integrity, because of poor governance and regulation. For local investors, channeling their funds through pension schemes. How do they perceive what's going on in the market at the moment?
As an industry, what we did, we had the benefit of learning from the other sectors. Pension reform also depends on complementary reforms. We're likely to have extensive reforms in the banking industry and the capital market, and now the insurance industry. We also decided to remain in a regulated market. In other words, pension assets can only be invested in regulated market, largely because of, one, liquidity, market discipline, and of course, the need to ensure that pension assets are protected. Initially, when we started, we were very conservative, particularly in terms of equities, and that's why we were lucky. The crisis we went through in the capital market did not adversely affect pension assets. Indeed, we had essentially about 15% of the portfolio then in equities. Now, yes, we are exposed to the sovereign risk. Basically, this is, this is Nigeria, and to that extent, that's the best risk you can get. We've also been working with the Securities and Exchange Commission to see how the bond market can be deepened. As I said today, basically only 2% of pension assets are in the corporate bonds, and we have about 30%, which we also intend to increase to 30%. So we are happy with the reforms that are going through, and that has also encouraged us, and this is also consistent with our policy, and whatever we can do to support them, we should be able to do that.
Mr. Daniels, just your views on this one. It said that many insurers lost money in the stock market crash, I use the word loosely, of 2009, and that the regulator has to intervene in ensuring that insurance houses find more dynamic ways of raising money, not necessarily using funds to invest in equities, because that's probably not the safest bet given the returns and the margins right now.
Yeah, in my introductory remarks, I did allude to the fact that the insurance sector was not immune from the crisis of 2009. Indeed, a number of insurance companies lost money. The nature of insurance is reasonably conservative, and if you look at the regulation of insurance, there are caps that is placed on investment, and therefore insurance entities are not allowed to invest beyond a certain threshold. And that threshold is fixed in such a way that the solvency of these insurance companies are not affected. So most of the companies that indeed lost money, substantially their solvency has still not affected. A few of them needed to raise extra money, given statutory period that is allowed by the law to up their solvency. But generally, insurance is not, the consumers are relatively safe because of the nature of regulations, the restrictions on investment of insurance funds. And if you look at the A&G crisis, you find that the insurance segment of A&G was not seriously affected for the same reason of close monitoring and supervision.
All right, we're going to be continuing with this conversation after the break. We are at the 16th NESG discussing issues of reform and regulation and seeing how the key players within the financial sector and capital market sector in Nigeria can coordinate policies for true improvement and introduction of best practice.